Hello traders, welcome back to Nova channel. In technical analysis, a triangle is a continuation pattern on a chart that forms a triangle-like shape. Triangles are similar to wedges and panels, and that can be either a continuation pattern, if validated, or a powerful reversal pattern in the event of failure. Traders use volume data to confirm the triangle pattern breakouts, and in today's video, I will introduce to you there are three potential triangle variations that can develop as price action covers out a holding pattern, namely ascending, descending, and symmetrical triangles. Understanding these patterns can help traders and investors to make better informed trading decisions. Keep reading for insightful pattern information that you can put to work immediately. And there are a few key takeaways you need to remember for today's topic. Triangles in technical analysis are continuation patterns from triangular shapes on the chart. Ascending triangles typically signal a bullish continuation. Ascending triangles typically signal a bullish continuation in an uptrend and offer entries and exit opportunities. Descending triangles often indicate a bearish continuation in a downtrend and rely on trading volume for a breakout confirmation. Symmetrical triangles occur in a market with no clear direction and can break out in either direction, aligning with the existing trend. And lastly, volume confirmations is crucial for validating triangle pattern breakouts, preventing false signals. Triangles can be tested. And now let me show you how to understand the triangle trading patterns. Triangles can be best described as a horizontal trading patterns. At the start of its formation, the triangle is at its widest point. As the market continues to trade in the sideways patterns, the range of trading narrows and the point of triangle is formed. In its simplest form, the triangle shows losing interest in an issue, both from the buy side as well as the sell side. The supply line dismisses to meet the demand. Think of the low line of the triangle or lower trend line as demand line, which represents supports on the chart. At this point, the buyers of the issue outpace the sellers, and the stock's price begins to rise. The supply line is top line of the triangle and represents the overbought side of the market when investors are going out taking profits with them. Next, I will show you how to recognize and trade the ascending triangle pattern. Often a bullish chart pattern, the ascending triangle patterns in an uptrend is not only easy to recognize, but it also slam dunk as an entry or as a signal. It should be noted that a recognized trend should be in place for the triangle to be considered a continuation pattern. In the above image, you can see that an uptrend is in place, and the demand line or lower trend line is drawn to touch the base of the rising low. The two highs have formed at the top line. These highs do not have to reach the same price point, but should not be close to each other. The buyers may not be able to break through the supply line at first. They may take a few runs as if before establishing the new ground and new highs. The charters will look for an increase in trading volume as the key indication that the new highs will form. An ascending triangle patterns will take out 4 weeks or so to form and will not likely last more than 90 days. And how do the longs, which is the buyers, know when to jump into the issue? Most analysts will take positions once the price action breaks through the top line of the triangle with increased volume, which is when the stock price should increase an amount equivalent to the widest section of the triangle. Next, let's identify the bearish signal of the descending triangle pattern. The descending triangle is recognized primarily in downtrends and is often thought as a bearish signal. As you can see in the above image, the descending triangle pattern is the upside-down image of the ascending triangle pattern. The two lows on the above chart for a lower flat line on the triangle and, again, will have to be only close in the price action, rather than exactly the same. The development of descending triangle takes the same amount of time as the ascending triangle. And volume again plays an important role in the breakout to the downside. Some analysts believe that increased volume is not all that important. We, however, believe to it paramount. We'll always consider the strength or the weakness of volume as being the straw as does the drink. And the next part of today's topic, I will show you how to analyze symmetrical triangle patterns for trading decisions. So far, we have seen two triangle patterns, one from an uptrend and bullish market move from one downtrend with a decidedly bearish look, Symmetrical triangles, on the other hand, are thoughts of a continuation pattern developed in the market that are, for the most important part, the market seems listless in its direction. The supply and demand, therefore, seem to be one and the same. During this period of indecision, the highs and the lows seem to come over. The highs and the lows seem to come together at the point of the triangle with virtually no significant volume. Investors just don't know what position to take. However, when the investors do figure out which way to take the issue, it heads north or south with big volume in comparison to that of the indecisive days or weeks leading up to the breakout. The breakout generally occurs in the direction of the existing trend. But if you are looking for an entry point, following a symmetrical triangle, jump into the fray at a breakout point. Descending and symmetrical triangle patterns, that is, the symmetrical triangle as well as those on the bullish and bearish side, are known to experience early breakouts that give investors a head fake. Hold out for a day or two after the breakout and determine whether or not the breakout is for real. Experts tend to look for a one-day closing price above the trend line in a bullish pattern and below the trend line in a bearish chart pattern. Remember, look for volume at the breakout can confirm your entry signal with a closing price outside the trend line. That is the lesson today. Thank you for your watching, and don't forget to like and subscribe for Nova YouTube to receive more useful information for your trading journey. Happy trading and see you in the next video.